Hello and welcome to the program. I'm Temple Ashaju. It was a plethora of activities at the Nigerian capital market this week as the stock exchange saw two listings. One was a product and of course the other was the very first company to be listed this year, and that's the Initiates PLC. Again, we had a lot of the stockbrokers as well as dealers brainstorming on sustainability of the economy at their annual conference, which was the 20th in the series this week. Other market-related events this week were the FBN Capital annual meetings, where we had the presence of the Minister of Trade, Investment and Industry, that's Dr. Okechukwu Enelama, as well as the unveiling of the master plan for the petroleum sector by President Muhammadu Buhari. On the show this evening, we'll bring you the highlights of most of these events, as well as some interviews on the topical areas of the dialogue. We'll also bring you most of the earnings, or some of the earnings rather, that actually were released to the market space this week. Well, let's kick off the show now with those earnings that were released. And on the radar here, we will begin with Access Bank, which is one of the Tier 1 lenders in the Nigerian capital market. Tier 1 bank, Access Bank, lightens the market this week with its impressive earnings from the banking sector. Its gross earnings for the 9-month period came in at 274.46 billion naira, up 6.6%. Interest income grew 16.6% to 181.21 billion naira compared to 155.36 billion naira in the year before. Axis Bank also saw increase in profit before tax to 72 billion naira, while post-tax profits moved from 48.09 billion naira to 57.09 billion naira by 18.7%. And Axis Bank's earnings per share is currently standing at 2 naira 59 kobo. Now, the only indigenous oil exploration company listed on both the London and Lagos Stock Exchange, Seplat Petroleum, announced a lower revenue of $202.68 million for the third quarter of the year. But profit before tax and profit after tax grew to $87.64 million and $97.77 million, respectively. The company attributes the loss in revenue to the wave of militant attacks on oil facilities in the Niger Delta region. Well, that of Dangote Cement was also released this week, and of course, being the fact that it is still the earnings season, Africa's leading cement producer, Dangote Cement PLC, reported a higher revenue of 442.09 billion naira for the third quarter of 2016 versus 365.45 billion naira a year ago. Profit before tax, however, declined to 148.71 billion naira, while profits for the period also fell to 133.52 billion naira. Now, earnings per share came in at 8 naira 13 kobo. FX scarcity impacted on the conglomerate's revenue as it reported cost of sales at over 231.68 billion naira. And now the breweries sector. Nigerian breweries 9 months 2016 results has also shown that the trends were not too good at this time of the year. Sales were up 3.6% year on year. Both PBT and PAT, that's profit before tax and profit after tax, declined by 26% year on year and 23% year on year respectively. Although there was 323 basis points year on year contraction in gross margin to 43.7%, which served as a key driver behind the year-on-year reduction in earnings. The report also showed a 95% year-on-year spike in interest expense to 10.2 billion naira. The marked decline in profitability was mainly driven by gross margin contraction and rise in operating expenses. Now, the earnings season this time comes with negative performances across board. In fact, for most companies that had a positive 9-month record, they had a poor third quarter report when you compare Q3 with Q2. But in the words of an equity research analyst, this is not surprising. Let's listen.
It's not a surprise what we're seeing. So if you have a lot of liabilities in foreign exchange, so a lot of the consumer goods companies have to import their raw materials, then by extension you will find that your cost of goods sold will be much higher in Naira terms, even though your sales wouldn't really see significant translation effects because you're still selling in Naira. So it's not a surprise that the gross margins, the gross profit numbers, the earnings are weak. They were sort of broadly expected, a bit worse than we expected, but I don't think the market is shocked as to the scale of the declines that you're seeing with some of these companies. On the flip side, the banks can position their balance sheet in such a way that they can actually do pretty well despite what's going on. So you've seen the results of the large Tier 1 banks being pretty decent, but a lot of the consumer companies will still show quite a bit of weakness for some time yet. However, with the Naira where it is, if we see some stability or a limited depreciation going forward, you will start to see some of the strategies they put in place to address this FX problem start to come through and offset that weakness. So it's not surprising that things are challenging from the results point of view, but it's not going to last forever.